Hey, good afternoon, traders. Good afternoon. My name is Raul Rivera. I am the founder of themarketprofile.com. Today is Monday, August 18th, 2017. Let's get started with today's trading. Now, today we have a short video. Not really a lot to talk about. The markets were pretty quiet. We made a low early in the overnight session and then made a high during the open session, which unfortunately I was not able to take full advantage of by just 3 ticks. So let's explain the trade here. So looking at the profiles here in the S&P 500, I'm going to go ahead and just scrunch this up and then just maximize it. So we had an idea early this morning. Every single morning in the room, what we do is we analyze what we're seeing in front of us right here, which is a market profile. And we pick levels of where we think support and resistance will be. And it's not just where we think. We pick these levels out by looking for areas of value, right? Or the value areas. Now, we're not just looking at specific value areas. This is what differentiates us from just every other market profile software or even volume profile software. We can actually split time without having to go through 10,000 different settings in order to find the right distribution shapes. As you guys may know, if you guys hear me all the time, we look for P-shaped distributions, B-shaped distributions, and D-shaped distributions. Okay, a D-shaped distribution, or what we're looking at here, are actually standard deviations. These are bell-shaped curves. And it's a statistical method of analyzing data, right? And the data that we analyze when we trade is either price and time or volume by price. Okay, and there's a difference in the keywords there, right? It's volume by price, not volume and price, right? Volume by price and time and price. So volume by price, which is a volume profile, and time and price, which is a market profile. They both do the exact same thing. In fact, when we talk about profiles, when it comes to trading, all we're really talking about are bell-shaped curves or distributions. Many of you may know the bell-shaped curve. It looks like this, right? And flip it over, turn it over 90 degrees, and there you are. I mean, this is what we're seeing here. Now, some curves have a positive skew to them. That would be a P-shaped distribution. A negative skew would be a B-shaped distribution, and something called normal distribution is a D-shaped distribution, right? It's even all the way across. Now, sometimes we get distributions where we have more than one bell curve inside of it, right? So something like this, we have one curve here, we got very curved there, another small curve here of at least 3 letters wide, right? 3 letters wide. So we got multiple curves here. Here we have 2 of them, so on and so forth, right? A lot of other software won't let you do this, but if I go over it and I just click on it with my mouse, it automatically splits the distributions for me into whatever shapes I need. So here I'm just going to continue to split. Of course, anything that's 3 letters or wider, right? I just go over the mouse, with my mouse and click on the profile, and voila. So here in this large sell-off, this was 2 Thursdays ago, we have a D-shaped distribution followed by a B, followed by a B, followed by a B, followed by a B, right? Tons of B shapes here, where normally you would not be able to split it with such ease on any other software for that matter, even just merge it back into itself. So this is what we do every morning, right? We look for value areas that are inside split distributions, right? Value areas inside the split, because if you notice here, here's the value area for the TPO, and here's the value area for the volume profile. But if you notice, if I just go ahead or come over and split it, suddenly I don't have the same value area. I have a little value area inside this profile, and as soon as I keep going, I split even more profiles, and more different value areas emerge. And true value lies inside of singular distribution profiles. Okay, that's why P shape, B shapes, and D shapes are so important. Not because of the way they are in a single day, right? I mean, what kind of shape is this? I mean, we open here, we close here. I mean, what shape do we have here, right? It's easy to say this is a P, but that's not the way it works, right? That's not the way it works. So what I do in the room is, I train, I educate on market profile, and I also show you my strategy on how to find value. And this isn't just a strategy that I use, okay? Exchange members, hedge funds, proprietary traders, anybody who really just is a speculator in the futures has to be using the market profile, okay? The exchange members, I mean, the market profile was created by exchange members for exchange members. It wasn't until in the mid 1980s when they released this style of trading to the public, but for some reason it's not widely adopted by not the hedge funds or the institutions, but rather the retail trader, right? Everybody always says, well, everybody uses moving averages, so if everybody's seeing the exact same thing I'm seeing, then it's all good. But when it's really comes down to it, the retail trader is about 7% at its most, maybe 7 to 10% of all of the day's volume. Okay, the rest of the other volume, the other 50 to 90% comes from institutions, exchange members, and pretty much anyone with multi-million-dollar or even multi-billion-dollar accounts. Okay, so who would you rather follow? The little guys trading moving averages, or what the big guys use in order to locate where they want to place their orders and trade? I think I want to follow the big guys rather than everybody else. So, and this isn't too difficult. All we got to do is just have the proper software, which not many, regular retail trader platforms carry by default. Okay, thus creating the possibility of me coming in and revolutionizing pretty much what the market profile is and what it stands for. So it's a charting technique for locating value. Okay, that's probably the simplest definition of what a market profile is. A charting technique for locating value. Okay, if I switch over to candlesticks, right, this is something that's more familiar to everybody. And if I were to turn off the profile, could you tell me where value is located? No, you could not. I mean, you'll probably see, oh, okay, well, we made a little top here, we got a little bottom here. But guess what? If I were to take a look at the profile, a lot of these little pivot highs and pivot lows may not be areas of value, right? So we want to be the most precise, and we want to do this as best as we can. So here in the S&P 500, early this morning, we figured we want to be short 2450 to 52. Just the other day, we wanted to be short 60 to 65. So what's changed? Well, the markets have changed, right? Volatility has now gone away for a small period of time. Who knows if it'll ever come back again? And we're starting to trade in a bit of consolidation, right? And there's been a lot of selling in recent times. So I don't think the selling is over, but so far we found a way to just stall the market. So looking for value, after I split the distributions, we found that 50 to 52 was the area to start selling, and then 30 to 32 to start buying. Unfortunately, this was too good or too well executed for the market to want to assist. So taking a look here, the high of the day, we figured 50 to 52. So we had sell orders in here. I have 6 contracts ready to short And then we made a high of the day that was at 49.25. So that was just about 3 ticks too good for the market. But we knew that this was the area that some of the selling could begin, right? Because this is where it located value. From there, the market traded as low as 38. So it's kind of a bummer. It is Monday, so markets, I guess, did not just have enough volatility or volume at all to get up here. I mean, let me take a look at what the volume numbers are for today. And, we didn't even trade 1 million contracts. We did 920,000 contracts. So not a lot of activity. Could be the reason we couldn't just push that extra 3 ticks or more in order to get a fill on this trade. So had to miss out on this one. Didn't take anything else, but would have been nice from 50 to 38. That would give about 12 points of potential range of profit, right? Nobody could ever sell the absolute high and then the absolute low, okay? Maybe a few people will do that once in their lifetime, but that is extremely tough to do on a daily basis, which is why, from up here to down here, I like to call it a range of potential profit, because I could have taken it out for 5 points, 6 points, anything of that nature, and it did have a little more. Didn't have more than 12 points though. But did not participate in this one. The market was not able to get to my location. Now, being as it may, this month has been a little bit of a rough month for trading, and at least for me in the futures markets. And so I've had to apply a little bit more discipline. I had to sort of self-regulate some of my trades. And here's a prime example. This could have been an even worse day than it really was. Taking a look at the crude oil market, there was one trade in our arsenal that worked out for at least, again, 140 ticks of range of profit potential. Okay, 140 ticks. And that's our trend trade strategy. So early this morning, we had a B-shaped distribution. In fact, I will show you, because our software makes it that simple. Right? I'm just going to go ahead and start distributing lower, lower, and then lower. So here we can see early on, here's where we opened, here's where we closed this period. So the characteristics of a B-shaped distribution are that the open, or the largest bulk of distribution, must be well below the open. Okay, and we have that. We also have a selling tail at the high, so this is completely a B-shaped distribution. Okay, here didn't even make it to any highs. Traded lower, larger bulk of distribution is at the lows. This one's a B-shaped distribution. Okay, and this is where we came in this morning and started looking at the profiles. So knowing that we had a B-shaped distribution, what we were trying to do is sell volume or time. And volume and time is VWAP and TWAP. So volume here is in blue, TWAP is in red. Volume, or VWAP, is more reactive to price changes because volume can increase and decrease over time. Time, on the other hand, you cannot speed it up or slow it down. So it's less reactive to price movement, more reactive to time, moving forward. And time is usually the better location, especially for crude oil. And right there, we can see we got right to time, 47.60. The market traded as low as 46.20. That's 140 ticks of potential profit. Now, this one trade, I did stop trading it just for this month alone, because it is a 60-40 proposition, right? 60% of the time the trade will work, 40% of the time it will not. If you're not having a good month, trying to put some risk that I know for a fact is about 40% going against you, it's not a trade that I would certainly approve of. Okay, so I had to sort of self-regulate here, say to myself, you know what, if this trade works, great. If it doesn't, then I'm not really going to expose myself to a 40% level of risk, right? Even though I may be taking one or two contracts, 40%, I'm trying not to take the trades with the least probable amount of chance of working, right? It's not a value trade, it's just a moving average trade, but this moving average is a lot more calculated than your simple moving averages or something like that. It's the average of a standard deviation of time, right? That's not something that a simple average is, simple moving average. So that trade would have worked out great. Didn't take it. The one I took was here, 3 contracts. After locating value, we figured 47 to 46.90. 47 to 46.90 was the area to start buying. I got long all 3 contracts, and it's important to have the right amount of contracts plus the plus a risk level that you're comfortable with, right? So I was comfortable with 30 ticks of profit loss, and that was hit here in crude oil. So stopped out for 30 ticks, but a lesson well learned. Okay, now I've only been trading since 2009, and what I've never had this kind of experience or reaction. So lesson to all of you who may be listening right now, the next time a hurricane makes landfall in Texas and there is a lot of news circulating that they're going to close down refineries, do not get long crude oil. Okay, do not get long crude oil. Get long gasoline futures, but don't get long crude oil. Okay, so lesson learned. Next time there's a hurricane and it makes landfall and I'm starting to hear things about refineries shutting down, then I will not get long crude oil. I'm always going to be looking for the short trade. Okay, the reason crude oil is falling down is because refineries, at least the rumor is 30% of refinery production is going to be offline or shut down pretty much. So what happens is, if we, gasoline is a byproduct of crude oil. So if that excess crude oil that we are drilling out of the ground is not being, refined into some other products, that means that probably we're going to have a huge crude oil inventory build or more supply, right? We're going to have more supply, which means less demand. Whereas for gasoline prices are through the roof right now, which is good if you're long gasoline futures, bad if you're about to go put some gas in your car. But gasoline futures are now experiencing less supply because crude oil is not being refined, right? So less supply, maybe demand hasn't changed, but the less supply you have, the demand curve may not change, but it acts as if it increased, right? Thus, what that creates is higher prices, right? Less supply, more demand equals higher prices. More supply, less demand equals lower prices. So now with more supply in the crude oil market, we're experiencing lower prices. Okay. Tomorrow, the idea is going to be looking to get short, and I could already tell that I'm going to be trying to get short around 46.70 to 80, 47.35 to 45, depending on what kind of market we have. But definitely looking for the long side rather than the short side. Now, a lot of short covering happened today. Positive 17,000 imbalance. So anybody who is short, look at the accumulation of longs, and also the institutional traders. Long. I think this is all short covering. They've been short for a long time. They rolled over to the new contract, which is October. It's been new since last week. And I think they're starting to just short cover the crap out of their positions. This is a huge number, especially for crude oil. Crude oil doesn't trade At the end of the day, crude oil doesn't trade as much as the S&P 500, but it kept pretty close pace. I'm seeing 900,000 contracts traded, the S&P 921,000. So pretty heavy volume day here in crude oil, and it should have been a heavy volume session simply because we did sell about 2 points from the highs of the day. Okay, looking at gold. This one's taking the headlines. Not so much crude oil. This one here, gold is definitely taking the headlines. Finally breaking out above 1300, but this isn't anything new. I've been just screaming this in the trading room. I've been saying it in the daily market summary emails. Okay, gold is about to rip. Let me just declutter the chart. You can see some of my trades here. I just want to take that off. There was no trades today in gold. Tried to get long, but let's have a look at this. So before Friday's Jackson Hole Symposium, I mentioned how the institutions were scaling into gold. Here we can see 1 day, 2 days, 3 days, 4 days, 5 days. Here pretty flat. So 5, 6, 7. Today makes it number 8, where the institutions just continue to get long, long, and long. Now here we had a bit of a wedge and also consolidation, right? A lot of consolidation, and they continue to buy inside of consolidation. These guys are rarely ever wrong, but they are wrong, okay? And as you can see, prices just exploded to the upside today, okay? We knew this could happen, especially after Friday's move from the lows to the highs. Fantastic trading on Friday, and all based on the idea that we're seeing the institutional traders buy, and we need to find a place to get long. Now, today we tried to do just that, get long only. Okay, when I take a look at the short term, heck, even if I take a look at the long term, the last time we were above 1300 was prior to the election, and the very last time we were comfortably above 1300 was election night. Of course, we all know what happened then. Gold started to sink as they were naming Donald Trump the president-elect. We've had a couple of tries to trade above 1300. This one failed. We closed all the way down here, and then a couple months ago, and then 6 months, I don't know, whenever it happened, we tried 1300 twice this year, did not get it. We always pulled back, and we were inside of a 1200 to 1300 range. Okay, now we're above 1300. I mentioned it earlier this morning as well to the members of the room. 1310 to 1325 short-term targets for gold. Okay, those are my short-term targets for gold. 1350 now. If we could get to 1350, we got to start asking the question of, where are we going to go from here, right? What's the market like now? Because that would be later in the future. We don't know when we're going to hit 1350 or if we will at all. But if we do, you got to ask yourself, where is gold going to go from here? Okay, is it going to continue higher? And that's when we're going to have to analyze, what are the market conditions at the moment? Do we have Fed rate hikes? Do we have any sort of news that would drive gold higher? Who knows? We'll see. But 1325 I think is definitely coming now. In order to get long, we want to get long in areas of value. Early this morning we figured we could try it small if the market does pull back to the lows of the day. 96 to 97, of course the market never made it that low, and then if it were to fail and we did continue to trade lower, we would be looking for 94 to 92. It doesn't take a genius. That didn't even come close to getting there. Not even on the trend trade, VWAP and TWAP were not hit at all. Okay, you can see the market just continued to rally. I think we made a high close to 18. I don't think 18 on the dot, but close to 18. Gold's going to continue to move higher, especially with the Fed pretty much hinting that they're not going to raise interest rates in September or October or November. I think the interest rate hike is going to come in December. and it's only going to be a 1/4%, right? I think the Fed is terrified of how inflated stock prices have gotten, and that's a worrisome type of thing, especially for liquidity in the banks. But I don't want to get too much into that because that's like a whole totally different story. Moving over to the 30-year bond, this one we got very close to a fill. Let's take a look at it. Very close to a fill. Looking at the profile view, it's a little more cleaner view, and pretty much after all the splits were said and done, we tried to get long 56.04 to 156. I had one contract just to get long, meeting in the middle of 156.02. As you can see, prices came very close. I think 156.06 was the low of the day. 156.05 was the low of the day. So came very close to the buy zone. And as you can see, I mean, what we were expecting did happen, which was a range. Remember, 80% of the time we get a range in the market. And again, here we were just a little bit too good. Not enough volatility to really stretch the marker higher or lower. In our case, in this case, would have been lower. So 156.02, no fill, and so you can see the market did trade higher from there. So the idea to get long below the profile, under value, into areas where we certainly had plenty of value. That was the idea, right? But not executed upon today in the 30-year bond. So that's all the time I have for today, guys. If you guys like this video on Facebook, please feel free to give us a like, or go ahead and comment in the comment section below, and I will reply and like your comments all at the same time as soon as I can do that. And I'd like to invite you guys to come try us out, check out the trading room. Just go to www.themarketprofile.com and claim your 14-day free trial. And just a little spoiler alert, if you do sign up for the 14-day free trial, please make sure to come by on Wednesday. Wednesday is going to be a huge news day. We have, actually, let me go back to gold here. We're going to have ADP employment, okay? Which is, they call it private employment, which I still don't understand why. And then we have GDP, okay? And these two pieces of news are within 15 minutes of each other. Okay, ADP is at 8:15 a.m. Eastern Time. GDP is at 8:30 a.m. Eastern Time. Now, GDP is preliminary, but preliminary, or normal, non-preliminary, GDP moves the markets, okay? Especially gold, especially the 30-year bond, and especially currency futures. So I'm going to be up very early trading these markets, and I think you guys should definitely check it out. Sign up for the 14-day free trial, and you can watch me trade these really big reports, as well as the non-farm payrolls on Friday. So www.themarketprofile.com is how you can go about doing that. Anyways, guys, I hope everybody has a great evening, and I will see everybody back tomorrow. Thanks, everyone, and I'll see you then.